Good evening, ladies and gentlemen. I would like to welcome you to the first live session at the start of the financial year 22-23. So, how are you people? Let's chat in the comment section a little bit. Please drop in your comments. Well, I'm here to ask you the most pertinent question. How was your financial year end? Yes? Let me know in the chat window. Well, the title of this webinar says that 7 critical things you need to take stock of at the year end for a successful financial year close. Friends, if we look back year after year after year in our business, our life has just passed by. Every time a 31st March comes, the only thing we do is, hey, I'm very busy. It's 31st March. Let's connect after a few days. But really, 31st March, when the year closes, what is it that we need to reflect upon? Mind you, it is not just a financial year close, it is much more than that. And when the financial year is coming to a close, a lot of thoughts also take a cut off because we become one more year older, one more year wiser, and add little bit more experience to our lives and our businesses. So friends, what are those 7 things which you should take stock of? Very critical 7 things. As I tell in all of my webinars and my social media live events, that friends, please keep a pen and a paper handy because I make notes. You see this? I make notes with different color pens and I make sure that they go into my permanent memory. Human memory is very funny. When you use light, color, taste, sound, smell, it takes you to a different level and makes your memories more stronger and more permanent. So friends, please note it down. Every year end, if you have noted this down, you will think of me. If you will not think of me, you will at least think of these 7 points, which kind of will cut you off from the previous year and put your thoughts for the start of a brand new, exciting financial year. By the close of this event, I will tell you that why in India we have 31st March as our year close. A lot many people say it's because of Indian festivals, it's because of this, because of that. I'll tell you the real reason. But before that, most important topic of the day for which you subscribe this live is the 7 pointers. What are the points? Let's check. Point number 1. Did you take stock of your closing inventory? Of course, some of you are in services business and you don't have any inventory. But let me tell you, for all service providers, you have an inventory which you don't realize that you have because you can't store it. Yes. I'm referring to time. Most service businesses have time sheets filled. Why? Because services are produced and consumed at the same time. For those of you who are in product, what was your closing inventory last year? Did you compare it with this year? Most of the time, 31st is the right day for taking closing inventory. Of course, we all know this. Second point, did you take stock of your closing receivables? How much money do your customers owe you? Have you thought about it? Have they gone up compared to last year's close, or have they come down? Will some of them pay? What is the age? No, not of your customers, but of your receivables. You need to take a cutoff on 31st of March each year to come up with a number which is reminiscent to the turnover of your business. Because too high receivables and you will run short of cash. Too low receivables, you may run short of customers. It's a fine balancing act. Have you taken down the first 2 points? Take stock of your closing inventory. Point number 2, take stock of your closing receivables. Let's now go to point number 3. Did you take stock of your payables? Yes, friends. I am referring to your suppliers, your vendors, to whom you have to pay money. Where do you stand in terms of making your payments compared to last year? Are your payables piling up or have they gone down? If they are piling up, there is a reason to worry. Why? Because I am sure, being such a good paymaster like yourself, you would not like to see overdue payables in your accounts for sure. There might be a very solid reason why your payables are piling up. Is it because of shortage of cash? Hey, by the way, I just wanted to tell you that I do a webinar called Cash Simplified just in case you have shortage of cash. Right? So that's point number 3. And yeah, if your payables have gone down, did we negotiate the right terms with our suppliers? Did we get the right price? Did we get the right credit period? Think about it. Let's go to fourth point. Now I know some of you, rather most of you, will complain, hey Vishal, this should have been your first point. Why is it coming on number 4? But I'll tell you why a little bit later. Let's compare our top line or our sales. What was our sales this year? How many invoices did we cut? How do we stand in comparison to last year? Has the sales gone up? Oh, this is a question that everybody just wants to know. And we have been burning our midnight oil just to ensure we show some growth. Trust me. The bankers, the employees, the family members, even strangers walking on the street want to know whether you're growing 10% year on year or not. Oh, come on. Give me a break. Is 10% revenue growth such a sacrosanct number? Well, maybe, if so many people are asking. But I want you to introspect when the financial year comes to close. That at what cost are we burning ourselves out to show some kind of growth in our company? Point number 5. How about capturing our GP? Yes, gross profit margin compared to last year. Have the margins gone up? Oh, Vishal, don't say that. Look at the raw material cost prices. Last 4 months have literally killed me. Is there any margin even left? What are you talking about? Of course, all of us got this input price shock. Well, some of us had a very good shock absorber, we absorbed it. Some of us pushed our customers. Well, we had no choice. I mean, I can't pay from my own pocket. I already have very thin margins. Yes, your arguments are justified. Of course, you took a margin hit. But hey, What is the margin hit compared to last year? And why was it hit? Was it just the input cost pressure? Was it lack of effective demand that you gave away too much discount? Try to get to the root cause of your margin erosion. Friends, a lot of skeletons are hidden in that closet. If you can tell me the root cause of why your margins are going down, I can turn around and help you to transform your business in such a way that cash flows can improve. Well, that's a topic of discussion for some other day. But today, I want you to introspect your GP or your gross margin. Well, I'm sure you have taken note of all the 6 points. For those of you who just missed out, let me repeat. Point number one was closing inventory. Point number two was closing receivables. Point number three was closing payables. Point number four was our top line or our sales. Point number five was our gross profit. What is point number six? Hey, I never told you point number six. Now I will tell you the point number six. Well, let's look at point number six. Point number six is our direct cost or our variable cost. What is variable cost, Vishal? It's very simple. Any cost which is required for me to deliver my product or service to my end customer. It could be my product cost, it could be raw material, it could be packaging, it could be people cost if I'm into service industry or IT. Any cost that is directly forming a part of my output or my service delivery to the customer and is directly correlated with my revenue, which means higher the revenue, higher the variable cost, lower the revenue, lower the direct cost. And yeah, by the way, both the terms can be used interchangeably. Okay. So what has happened to my variable cost? Has it improved compared to last year? Which means has it gone down? No, unfortunately. I know the market situation, the steel prices, the base raw materials, the plastics, the petrochemicals, the petroleum, even milk, vegetables, and manpower, everything has gone up. So if I were to ask you this question, I would be completely wrong. So, how has been the behavior of your direct cost in the last year? If you are able to map it in your mind, trust me, you will become a pricing expert because your margin and your direct cost, these are the two key drivers of how you make some money, little money out of every sale that you make, because you and me, we both know that prices are mostly dictated by the market forces. We hardly have any control over it. We just have to manage our cost here, there, and fix something for us, fight for it. So that's the sixth point. Any guesses on which seventh point could be? No guesses? Okay. The seventh point, here it is, coming your way. How has been the behavior of your fixed cost compared to last year? At the financial year close, I want you to see what is the meter that you are running. Oh, Vishal, last year I was running 5 lakh a month. This year I am running 7 lakh a month. I don't know where will I get the money from every month to feed this cycle. I know, I empathize with you. I feel your pain. I run a cycle like that for myself, for my business. And trust me, friends, if anything that gives sleepless nights to us business owners or entrepreneurs is our meter. Every month the meter is on 24 by 7 by 365, whether we earn money or we don't earn money, whether we cut invoice or we don't cut invoice, meter is always on. So where does our meter stand? Let's take a closer look. Let us look at these 7 factors at the year close. Let us compare them with previous years and, if possible, with similar businesses in our field to find out where do we stand. If we do this exercise at every financial year close, I am so very sure that you will take definitive steps towards taking data driven decisions in your business. And there are three bonus points which I wanted to give today, which you must think and which you are not thinking at every year close. Please take down three bonus points. We had 7 points, starting with inventory, then receivables, then payables, then top line, then margin, then variable cost, and fixed cost. Now we come to three additional bonus pointers. What are those? Already excited? Hold on, it's coming, right? Did you think of, now, first 3 points were classified as did you take stock of? Inventory, receivables, and payables. The next 4 points was how about capturing your top line, your margin, your variable cost, your fixed cost. Last three comes into the category did you think of? What are the 3 points? Well, did you think of A, planning of business for the next year? I know. I'm talking about that word which most of us want to avoid for obvious reasons because it never materializes, and that is a dangerous word called budget. How many of us? No, only think of. I'm not asking you to make. My title is aptly placed. How many of you think of planning your business for the next year, budgeting for the next year? So sometimes you should think. Next point. How many of you will think of planning of taxes for the next year? Hello. I'm underlining the word next year, not last year. Trust me, friends, what you sit and do with your CA in March for the year that has passed by, if you do the same thing sitting with him in April for the year that is going to come, your tax liability will be far more accurate, meaningful, and sensible enough to give you an ever growing trajectory in your business. Think about it. He is busy in March, he is free in April. You are busy in March, you are free in April. So why don't you shift the meeting from March to April and do it for the next year? Instead of doing a post-mortem of what has passed behind and then try to do some kind of jugaad and try to, lower your taxes. Yeah. All I am saying is, I'm not saying that you pay more taxes. All I'm saying is you plan in advance. Is this doable? Please take that as an action point. I will sit with my CA, not in March, but in April, not for last year, but for next year. Right? And last point for the day, thank you so much for your attention here. And the 10th point coming your way. Did you think of planning your cash flows for the next year? What are you saying, Vishal? Cash flow? Plan? Oh, God is so kind. Whenever I have to make big payment, money comes from somewhere. My cash flow is ideally managed by God. Is that so? This year, God gave me the message that please go down and tell this business owner that I am sick and tired of managing your cash flows. You please do it yourself. DIY. So here is a message straight from God that, excuse me, hello, look here, plan your cash flows. No, still not getting it. Am I not audible? Loud and clear. Plan your cash flows. Right? Well, why? Why? You are asking me why? Okay, let me tell you. The very first step towards success in business is cash flow discipline. If you don't have cash flow discipline, I don't see you very successful in next March. Yeah, that's a hard fact. I'm not giving any gyan here. Unless you have cash flow discipline, you will not succeed in business. I don't say this. This is said by Robert Kiyosaki, the fourth generation Japanese American author who wrote that book, Rich Dad, Poor Dad, way back in 1997. Cash flow discipline, unfortunately, ladies and gentlemen, starts from first day of the year, which is today. No, no, no. I'm not making anybody any April's fool. If you start cash flow planning today, trust me, trust me, you will never run out of cash entire year. You agree, no? See, you are smiling already. You know at the back of your mind that what Vishal is saying is fairly accurate. Why don't you take action on it, Baba, in that case? The only gap between increase in your bank balance and your current situation is a cash flow plan. Oh, don't know how to do it? No problem. Join us to learn a step by step process of cash flow planning, which, if implemented, will never let your bank account run dry. And that's a guarantee from me. Can you invest 2 hours? Yes, yes, yes. Can you invest 2 hours? If you can, I will let you know when is my next webinar happening. And in that webinar, right from the word go, I explain a 4-step powerful system to generate cash in business. And friends, I have said this innumerable times, and I'm saying this again, that always remember, revenue is vanity, profit is sanity, but it's only cash. That is reality. So keep the vanity aside, have some sanity with you, and let's face the reality together in this wonderful new financial year 2022-23. I would like to wish you all a very wealthy and a successful financial year. This year, if you feel that you need somebody like me by your side to help you generate more cash, remember, I am just one click away. Thank you very much for joining today on the first day of financial year on a Friday evening. I wish you all a very first happy weekend, and I'd love to see you engaging with me this year and every year. This is CA Vishal Thakkar signing off. Have a nice